to a bonus episode of the Mid-Year Money Reset. In this episode, I want to help everyone who's interested in trading financial markets, whether it be the stock market or futures markets. And I don't do Forex at all, so I can't tell you about that. But if you're interested in these types of markets and you're interested in trading, I want to help you understand some of the things, the components that go around setting up good trades and thinking through strategy so that you're not gambling so much as you're using probabilities to be, right as far as the direction that you think your trade will go. So we have two ways of looking at trades, and that is through using fundamental analysis. And so fundamental analysis, like say for instance, if you're looking at stocks, that's looking at a company, what it does, how it makes money, the money that it makes, and all the things around its performance. News also goes into fundamentals, and macroeconomics go into fundamentals. World events and things like that can all influence the fundamental story. Technical analysis is strictly reading charts, right? Now, I train in a way where I train people to do both. I think it's super important to do both. So last week, the week of July 15th, I believe Monday last week was July 15th, we opened into the market. And over the weekend, there was an assassination attempt. And the news around that it was just a false narrative around the news, not so much about the attempt itself, but what it meant for markets. When you're able to read market structure and price action, you are able to see footprints in the market that kind of tell you or give you some direction as far as where price could potentially go next. And it doesn't have to, and you could be absolutely wrong. And you have to be comfortable being wrong in this space. But actually, that's in any space. Anytime that you ever, you're trying to perform or do anything, in any arena, any space, you're going to have wins and losses, and you have to be comfortable with that here as well. But anyway, I noticed that there was a fake, like some fake news being pumped out. And it was across all major news outlets, which is very disconcerting. And when I heard regular people, just talking about the stock market, then I'm like, yeah, we're definitely pulling back. And so this is some of the communication that I had with my members, the members in my group. And I said, don't let the news control your trades. This program is all about thinking for yourselves and not swallowing the news whole. It's natural to get confused by all the fancy terms at first. But trust me, the language of money becomes second nature the more you're around it. Markets run on liquidity, which basically means how easy it is to buy and sell stuff. Imagine a flea market, tons of people buying and selling. That's liquidity. So this morning, all over the news, there were stories about what an attempted assassination of the former prez might mean for financial markets. Now, remember, guys, this is like last Monday. I wrote this, and I wrote nothing. The market only cares about one thing: making money by buying low and selling high. Get it? That's why I skipped all the news drama and focused on the real deal, the charts and fundamentals, AKI, the why behind price movements. So I told my members, think like a market maker. Always asking, where's the money? Liquidity is the gasoline that keeps the market engine running up, down, and sideways. It pulls up in these spots called buy stops and sell stops, basically points where a bunch of traders have orders waiting to be triggered. Yesterday, studying the markets, I felt the market might dip lower, but probably test some highs first. So this morning, I wrote down my thesis, and what I do depending on how things unfolded, an if or then scenario. And guys, let me just pause here for a second. every time that I sit down to trade, I traditionally am a swing trader, which means that I'll go into the market, like I can go into the market today and I can get out tomorrow. That's a swing trade. Or I'll go into the market today, get out in a few days, swing trade. An intraday trader or a day trader is someone that comes into the market and they're out within minutes with profits, or they do the trade, they allow the trade to stay open from the open of the market. So let's just say you're trading the New York Stock Exchange or the New York Open, right? Or the New York session, excuse me. So that's between 9:30 a.m. Eastern Standard Time to 4:30 p.m. Some day traders will leave their trade on all day, but when you close it before the end of the day, that is a day trade. So sometimes I'll sit down to do a day trade, and I my goal is not to be staring at the markets all day. Some of my best trades, and they may not yield a lot of money, but all the time, but I like when I'm out of the market within like 10 minutes. Like I come in, I get out 10 minutes, I'm done. I could walk away for the whole day, except when greed gets me and I'm like, let me go back in. But I put so guess what? Both scenarios played out. So as a result, I cashed out some profits on two of my accounts by riding the market down. I peeked at what other traders were saying across the internet. The ones making money were talking about their trades, not the news. However, some folks were all, this assassination is bullish, bullish enough to trap some news chasing buyers who probably still believe that nonsense. Meanwhile, real traders who followed the charts rode the price up, sold for a profit, and maybe even shorted the way down. And then there are those who bought and are holding tight because some social media post told them the market is going to the moon. Spoiler alert, it probably won't based on an assassination attempt. And if you guys have any questions, put them in the comments and I'll be happy to really help you understand, why, I'm sorry to say it that way, but why that really does not move markets. And one of the reasons is, like, I'll just say that right up front. But since Biden has been in office, the stock market has hit multiple all-time highs. Multiple. So what that tells you is you don't need the other person, not for the stock market to do anything, because it's hit multiple all-time highs. Now, if you want to put this person in office because you're a fan, that's a different thing. But that has nothing to do with how the market is behaving. Okay, so hopefully that makes sense. So I put check out the chart below to see how the news trading strategy went. And I said, see, news can be a noisy distraction. Learn to read the charts and make your own trading decisions. So when people ask me like, so what does it take to be, a trader? Like, what, how do I know that I'd be interested in trading? Are you interested in things like this? For me, so here's the chart as you guys can see. And basically that was last Monday. Market open, started going up. It was, oh my God, the Trump trade, the Trump trade. This is what the markets think about Trump becoming the next president. And it's just like, so that next half, like afternoon, that happened at noon. That started at noon on the dot. It was like, bzzz, you know and I don't know if you guys have been paying attention, but today is July the 24th. Markets are almost in, at least the Magnificent Seven. Let me correct that. The Magnificent Seven stocks, which are the largest mega cap tech stocks that we have. And because they're so heavily weighted, they pull down the market if they start tumbling. Today, all of those stocks collectively are near a correction territory. So, okay. Um, but ask yourself, like, is this interesting to you? Because if it's not interesting to you and all you think about is, well, I can make a lot of money, that's a fact. But if you don't understand how to discern high quality information from low quality information, then you will always get caught up in a news trap, or a social media trap, or just people who are near you, your own biases, things like that. Most of this, most of this game here is psychological. Okay, you do need a good amount of knowledge, skill, and all of that, but it's a game of you versus you. And if you can get swept up in every story, you will find yourself losing quite a bit. So I'm going to connect another video here because you guys see how I started this week. I had that bearishness, I had that thought that the markets were probably going to be bearish more so than they would be positive, which is how it ended. The whole week ended that way. And so you'll see in this next video, I share that if I were to really trust that thought that I had and that bias and my thesis, then if I were to take a certain amount of money, and you'll see what it looks like in this next video, and were to just hold on to that trade until Friday, it was around 10:40 a.m., that would have been highly lucrative. Hi, everyone. I just want to show you how we can make a lot of money in the stock market. What you're looking at is the S&P 500 index. And so the S&P 500 are the largest companies in America, right? And so we're looking at a 15-minute chart. Don't worry about all the markups that I have on my chart. This is what I do when I'm intraday trading. But don't worry about this. What I want to bring to your attention is this is a virtual account. You can do this type of back testing on Thinkorswim or any platform that you use for the most part, where you can go back in time and check out some things. So this whole week, today is Friday, July the 19th, 2024. It's 10:40 in the morning. I am not trading today. The market is pulling down. There's a lot of money to be made. I have an abundant mindset. I'm not missing anything. So basically on Wednesday, we hit another all-time high. We've been hitting all-time highs in this market all year long. We hit another all-time high. The news story, the narrative that was being pushed out by major news outlets was very manipulative and untrue. It was around a trade Trump and how the assassination attempt was pushing markets higher. That's nonsense. Markets run on liquidity, how easily you can buy and sell instruments, and there are levels to it. There are footprints that the market leaves that you can read if you're willing to do the work. Anyway, if I were to take a contrarian viewpoint, I ask myself, am I gambling or am I using strategy? And so if the market and all the news people and everything is saying it goes higher, it goes higher. If people who never talk about the stock market starts talking about the stock market, that's an indication that we are pulling back. So I take a different approach and I say, what if I were to buy an option here and hopefully the market pulls back? I'm going to give myself enough time so that I can be right. So I go into the option chain and I pick an option out to Monday. So it's Wednesday of this week. And I say, I'll go out to Monday. That gives me enough time. The option costs $13 and about let's say $14. That you have to multiply that by 100 because you'd be controlling 100 shares. So this option costs $1,400 to buy. So let's see what this option is doing today by getting off of the on demand and going live into the charts. Now, today is Friday. As I said, it is 10:40. We are looking for the 5630 option. That option is selling for about $100. You would have paid $14 for this option, and this option is now selling for $100. Could it all have gone wrong? Absolutely. You don't have to lose all your money. You can put on stops, okay? But here's the thing. Can you learn how to do this? There's a lot of women making money in this market, and you could be one of them. Let's talk about the math. So you pay $14 for a contract. Now, with options contracts, buying or selling, you are actually controlling 100 shares of something. So even though the contract is $14, you pay 1400 for it. Now you can trade options in the stock market or in futures markets. I do not recommend it in futures markets. But nonetheless, this is a $1,400 contract that 2 days later was selling for $100, which again, you multiply by 100, and that's $10,000. You grew $1,400 into $10,000. This stuff happens in the market every single day. Now, what would have caused you to miss out on that? The thing that would have caused you to miss out on it, which is why I didn't hold that trade because I was in a similar trade, is fear, is basically all psychological. You really don't know. You don't know how it's going to turn out, even though you have your bias, you have information that tells you that mm, this could happen. So psychologically, you'll get yourself out of a trade, and sometimes you'll get yourself into trades. So this is what we talk about when we say a lot of it is psychological. So you decide for yourself: is this using strategy or is it gambling? Do you think you need a whole lot of money to make a lot of money in the stock market? It's up to you. If you found this video helpful, please like, share, and subscribe. And also drop down in the comments and let me know your thoughts, ask questions, and let's talk about it. Have a great day. I'll see you in the next episode.